The SEC is shaking up the cryptocurrency space right now, and all of the new regulation that's pouring in is, well, it's well expected, but it's coming in a lot faster and a lot harder than a lot of people would have imagined. We're going to be talking about what Gary Gensler and the SEC is proposing right now, which actually may or may not be a good thing. One of the major concerns holding cryptocurrency on exchanges right now is that those are not your assets. The exchange is in custody of those assets. And what's been happening is when you go through bankruptcy, when these exchanges end up failing, they are the ones that remain in control of your assets. They are the ones who end up winning in that situation, and the customers are the ones who get screwed over. So we're going to talk about this latest proposal from Gary Gensler in the SEC and what it means for the cryptocurrency space. So if it sounds like something you're interested in, let's get started. Let's get started. What's up, everybody? I'm Clay. I'm here to make 2023 the best year ever. If you haven't clicked that subscribe button, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and we are growing our portfolios together. And look, if you're brand new to investing, you don't know how or where to buy stocks and crypto, you get a link in the description below for Webull. It is super simple to set up your account. Any deposit, you guys are getting at least 6 free stocks, up to 12 free stocks, and a $1 crypto trade is going to get you $5 in free crypto. If you guys want crypto exclusive exchanges where you can buy, sell, trade, short, leverage, all that good stuff, you get KuCoin and Binance down there. Now, KuCoin and Binance, they offer rewards for the more active traders. So the more you trade, the more you're going to earn. But please be aware, like we say, if you're holding on those exchanges, it's considered a loan to those exchanges. They are in custody. And if you want it to be your assets, you need to hold it in a cold storage or DeFi wallet. Yeah, guys, there's a lot going on in this article. We're not going to read through the entire thing, but we're basically going to go over the bullet points of what it means, because with Paxos and BUSD, with the SEC cracking down on staking, this is the next in a major line of regulation that is going to transform the cryptocurrency industry in 2023. The U.S. Securities and Exchange Commission, or SEC, is set to propose a rule that will effectively require registered investment advisors to go outside the crypto industry for storing digital assets, according to the first formal policy push that leans heavily into the cryptocurrency sector. The rule, scheduled for proposal by the SEC on Wednesday, would expand the agency's existing regulations to say that investment advisors need to keep customers' money in securities with a qualified custodian. Now, qualified custodian is basically, a bank or something that the financial services sector currently uses and may or may not be a cryptocurrency exchange. The new version, if approved, would grow that safeguarding requirement to any asset that investment advisors are entrusted with, including crypto. This is an interesting part, and I don't know about this just yet. We'll see how this ends up panning out, but this is very, very broad legislation and a very broad proposal. It says including crypto. They are talking about literally any asset needs to be held by a qualified custodian. Now, I don't know the scope of this. I don't know if you have a real estate portfolio, if this is going to mean, if you're going to need to be a qualified custodian and register to own any asset as such. That's a different story. It doesn't affect just the cryptocurrency market. That affects the SEC and the governmental reach that these guys are going for. But that's for a later day, because we don't have the broad scope of what that means just yet. Right now, cryptocurrency trading and lending platforms routinely offer custody for crypto customers, but they're not qualified custodians under this rule. An appropriate custodian under the SEC's regulations would generally mean a chartered bank, as we talked about earlier, or a trust company, a broker-dealer registered with the SEC, or a futures commission merchant registered with the Commodity Futures Trading Commission. You got to be registered with the SEC to be considered a qualified custodian. And I don't know how this is going to affect DeFi. Guys, this is another conversation right now, because CeFi, or centralized finance, has KYCs, and they know that they are in custody of somebody else's assets. That's what they're pushing right now. DeFi, you are still in charge of your asset, yes, But what happens with DeFi staking platforms? What happens when blockchains or validators are essentially in custody of these assets? You understand, if you are delegating to a validator on a decentralized blockchain, does the SEC have regulation over that? Will you be allowed to do that here in the United States? Because when you're delegating and you're staking your cryptocurrency, you are essentially handing it over to the custody of a validator. And if that validator is not a qualified custodian, they would be going against the SEC, and it would be essentially securities fraud, or at the minimum, some other breaking of a law that validators exist in the United States. So this is going to open up a can of worms in which the broad spectrum has not been discovered yet. So DeFi, be on the lookout. Centralized finance, absolutely be on the lookout. But I'm telling you right now, it's going to be interesting to see how this transforms the cryptocurrency space right now. Now, to go on and hit a quote here, rather than properly segregating investors, crypto, these platforms have commingled those assets for their own crypto or other investors' crypto, Gary Gensler said. When these platforms go bankrupt, something we've seen time and time again recently, assets often become the property of the failed company, leaving investors in line at the bankruptcy court. And yeah, Gary Gensler, that's true. I hope everybody recognizes in the spotlight right now that Sam Bankman-Fried is basically buddy-buddy. He's friends with Gary Gensler. And Gary Gensler overlooked this for years as Sam Bankman-Fried commingled assets, as Sam Bankman-Fried mismanaged assets, and it was fine because Gary Gensler's buddy, his niece, was dating Sam Bankman-Fried. They were getting their political kickbacks. They were receiving money, and they were helping, can you say helping launder money on YouTube? I don't even know. But the SEC turned a blind eye to it until it blew up in their faces, and now they are coming down hard with an iron fist trying to regulate the cryptocurrency space. Guys, I hope we open our eyes to what could potentially happen here. If the SEC does reach too far, and we allow them to reach too far, we are not going to see cryptocurrency innovation and growth here in the United States. It is going to flow overseas. Now, other countries and other places like Dubai and so on who embrace cryptocurrency could absolutely see the benefits of what it brings when the cryptocurrency space grows. I do think that if the SEC is allowed to regulate with an iron fist, we are going to miss out on the innovation, and U.S. retail investors are once again going to get screwed over by government regulation. But I don't know what we can do at this point. They are coming down, and they are coming down hard. If centralized finance doesn't fight back, decentralized finance has to fight back. I want to know what you guys think down in the comments below. Do you think that these SEC regulations are going to trickle down into the DeFi space or not? Let us know the answer to that down in the comments. And if that button right there is still red, make sure to click it, subscribe to the channel, join us, become a bro. We are here every single day, and we are growing our portfolios together. You guys got Claybro883 everywhere. 6 to 12 free stocks on Webull, KuCoin, and Binance, free Discord. And until the next time, hope that each and every one of you have an awesome day.